Thank you for watching Junior Mining Talks. My name is Antonio, and as every week, well, I'm actually lying because it's not every week. We haven't done it in a couple of weeks, Luke, because it's been conference season. And before we start getting into the actual conversation here, though, I would like to warn everyone listening and watching that we have not received monetary compensation for the production of this video from anybody. However, you still need to understand that this channel is a business that sells content producing services to companies, which means you cannot rely on this video for research. Research is conducted by reading official company filings, which you can find on setterplus.ca. Please only watch this if you know what you're doing. This interview is intended only for experienced junior mining speculators because mineral exploration, development, and mining is a very tough business where failure is the norm and should be the expectation. This is going to be a conversation that is general and impersonal in nature, containing forward-looking statements. I am not a licensed financial advisor, neither is Luke. So before continuing on, please do talk to an investment advisor with a good long-term track record because your capital is at risk. And we are neither licensed financial advisors, nor do I personally have a good long-term track record. If you're not 100% sure you understand 100% of the disclaimers that I just showed on your screen, please go to the last section of this video and do not consume this content unless you fully understand and agreed with everything said herein. That all said, well, the early part of conference season in 2025 is now behind us. Any takeaways? Anything unusual happening?
Yeah. I went to both conferences this year, the Vancouver one and the Toronto one. And there may have been a couple of other ones, like the BMO one in Miami, but they don't invite me for sure. But the good thing about these conferences, they all have their sort of own, pros and cons, I guess. And Vancouver, the VRIC doesn't really have one-to-one meetings on its own, but I always feel like I get some value from the Metal Investor Forum and the VRIC in Vancouver, every time for different reasons. This year, the AMark announced this porphyry copper discovery with Freeport, and we were the first people, I think the first or maybe the second, to talk to AMark in the morning because it was the morning of the MIF and they were there. And if you have a discovery news and you can immediately talk to the CEO, then you get way more context than just reading it. And of course, if you're at home and they get 20 phone calls in the first minute, you will likely not talk to them until a day later or something. So right now, you can immediately talk to the company. So that was a bit of luck because you could also ask some people in the region and get a couple of different opinions on it, and that allowed us to allowed me um, to buy AMark and to buy the surrounding companies TDG and Finlay. And I'm not sure if I would have bought that much stock if I wasn't at the conference asking them those questions. So that was helpful. And then Toronto, the PDAC last week or the week before, um, there was another discovery, a bit of an interesting one, because I know the company for a number of years, but nobody really cared about it, which is San Lorenzo, which made a new discovery in Chile. And if I didn't, I talked to them a few times in over the phone and by email, but never in person. And having a long conversation in person, really gives you some new color and context about what they are doing and, you know, uh, the good and bad things about the company. And again, it allowed me to buy the stock quickly and make a return. So both conferences, typically I go there not for an immediate stock tip or an immediate thing to act on, but sometimes you do find something that deserves an immediate uh, reaction. And in both cases, it worked quite well for me, which is no guarantee that these discoveries will work out, but so far they have worked out.
I think that's kind of unique, isn't it? I mean, most of the times, if you buy something off the conference floor, then that's probably kind of based on emotion. Well, maybe not in your case,
Hmm.
because even though you're not a ginger, I suppose you do have a soul, and sometimes you might have emotions. I don't know what that
It
feels like,
does,
but
yeah, it is. It's risky for sure.
I think most people would actually, and it happens to me too at conferences. You know, you would get kind of overexcited. It's really is different, especially if you have a good salesperson on the other end pitching your story. You can get emotional, and then you jump to a conclusion and buy it. And now it worked out twice for you, but does it work most of the times? I would actually think that most of the times it results in negative returns.
Yeah, I've agreed. I think it's in a way very risky to buy stocks because you just talk to someone. But I think the rule I have, I mean, I do not always follow my own rules, but I try to have a number of rules that I'm not imposing them very strictly. I don't have a checklist that I have to sign off every time I buy something. Maybe I should do it, but if you talk to someone and there's nothing new, but it's just a very good story which makes you excited, I think in almost all cases you have to wait a couple of days and just think about it, because typically after 2 or 3 days you realize there's more risks to it than you realize when talking to the person. When you really talk to someone, because a discovery is just announced, and the extra, context and discussion you can have with the person directly um, gives you more confidence in that recently announced news, then of course you could say, hey, this company has news. I've had a bit of an edge compared to most people because I just talked to this person, and there may be 10 other persons, but not everyone. So I know a little bit more than the rest, or I have a better idea of what they're doing. And so that worked out quite well for me this time. And but for sure it is risky. I talked to a few companies which I really liked and was tempted to buy it in the market, didn't do it. And in this case, it was a mistake, maybe because the stocks went up afterwards, but maybe the stocks went up because other people also liked their stories, and there was nothing fundamentally different. I mean, there's nothing fundamentally different right now compared to a week ago or 2 weeks ago. And I think you have to be careful not to pay up 40%, in share price just because you like the story.
Is there a general theme or like a common thread between these companies that go like is it the companies that go to these conferences that have seen like decent share price appreciation, or is there another theme or reason or something making these stocks go up?
No, normally I don't really see a lot of relation, unless you have a good market, I think. In the last couple of years, sometimes I paid attention when a company that I, for example, like a lot goes to a conference, especially the ones with very low liquidity, almost no volume every day. And then they talk to 20 or 30 investors in a week. And if you don't even see $10,000 of increase in volume, that means that either investors are very smart and do not buy immediately after a meeting, which is of course prudent in a way, but you would expect at some point, that a conference leads to some volume. Otherwise, why even go to a conference? And I do think that companies should go there without expecting to find a new buyer immediately. It takes a couple of meetings, but still, if you talk to 20 people and a month later you talk again to 20 people and a month later you talk again to 20 people, at some point you want to see a bit of you want to see some result from it. And maybe the result is only that the people know your name, and the moment you come with good news, people actually care about the news because you told them the story in advance. So there's several ways that marketing makes sense. But it still surprises me that in most cases, at least the last 2 3 years,
Hmm.
I don't see any change in volume or buying after a company went to a conference.
Okay, so there's either no investors or investors are getting a little smarter. Um, I
Mm,
want to talk about but what about the list that you've sent me on here? It's kind of the top movers since the beginning of the year.
yeah.
TGG's in here. Hey, a stock that I own is here actually that we might end up talking about. Would you imagine that? What's the common theme there?
Yeah, I was a bit surprised actually. I wasn't surprised by the names because I followed the list very
I
often,
thought you
but
were surprised that I actually am making headlines.
as well, yeah. No, I was surprised when I look at this list quite a lot because these names. I mean, people recognize these names, I guess, if you follow the market a little bit, because these companies have been doing well this year. But when you then look at what news really drove, started the company to really move up, it's mostly this year porphyry copper discoveries or porphyry discoveries in general. And again, not saying that all these things are going to work, but Quest in Australia had this low grade but big intercept porphyry discovery. Small market cap when they announced it, still small market cap, I think. And that's one. And then Finlay and TDG and AMark, are all connected to each other because AMark made the discovery, porphyry. Aras Minerals, I think that's the one you own. Did very well on the porphyry discovery. I'm not sure if it's a complete discovery or if I think it was the first couple of holes. So in any case, it's a porphyry drill hole or discovery. So if you look at the list of titles, I try to reflect the reason of the move as properly as possible by a very short sentence. But most of them are porphyry discovery related.
Yeah. Errors definitely an interesting that's what I own, so I'm obviously biased there. But I interviewed, so I met them at PDAC 2023, which is when obviously I didn't buy the stock because I tried to be smarter than I really am. And then I interviewed the CEO a couple of months ago. Let me see when that was. uh like the back then, it was August. Like the back then waited. I got a decent entry point there. um Shout out also to Vokashin. Actually, he is probably one of the most aggressive friends that I have currently, and he nearly single-handedly made me buy this. I'm just kidding, of course, but well, if it doesn't work out, I'll blame it on him. If it works out, I'll take all the credit, of course. But jokes aside, no, it is discoveries like this that seem to be working right now. Like basically, exceptional drill holes are the only thing that move stock prices right now. Is that fair to say?
Yeah, and I think in this case you also have, as far as I can see, I talked to them twice now in person. I talked to them once over Zoom, I think. Yeah, I think big land package, so not just one target that with 2 or 3 holes they can kill. I think this is a big target, but they have several targets and a big land package in a country where I think Ivanhoe recently also went into by going into a deal with Palace, I think is it called? I
Yeah.
forgot the name.
Yes.
But
Private co. Yeah.
yeah, so and then drilling a hole like this with a small market cap, good share structure, good shareholders, I think, and a good team, as far as I can see, then I think still 63 million which is US, by the way, in my list, is not a very steep price. And again, I don't know, I'm not into Aras myself. I know quite a bit about it, but not enough to really be confident. But it has all the it checks a lot of boxes for a company to become a way bigger company than it currently is. That's what I'm just saying.
Mm.
I don't think that one drill hole can completely kill this story. Maybe for a while if they have a couple of disappointing results. That's always. But this is a story that could end up becoming, the big winner, one of the big new discoveries in this junior mining space, I guess.
Yeah. And I'm also thinking about what doesn't work as well. And I do want to talk about some of the stories that you've been in that I've missed out on, including San Lorenzo. But what doesn't seem to work is when kind of a discovery gets heavily promoted. No, an exploration company gets heavily promoted before discovery, and then the discovery is not up to expectations, not up to par with the expectations. That kind of seems to be the overall theme. So exceptional drill holes is pretty much the only thing that's working right now. And then the things that don't work out, one of the things that's been costing people a lot of money as a common thread that I've noticed is that thing where there's been no or just very few drill holes. It gets promoted heavily, and then the results don't necessarily deliver on what the expectations were.
Yeah, I think what also worked last year, and we're not really talking about it right now, but the mid-tier mining companies. But if we just
Mm.
stay away from that a little bit right now, we look at non-revenue generating companies. Indeed, it's discovery and I think stewardship. Every time, and we have discussed this also quite a number of times already in the show. When you see stewardship, like a big name, Lundin family, but also in this list, I mean, the last one on this list, Bellows Sun, La Mancha joined as a new shareholder. That would normally be a signal for me to buy it, but I didn't really know. Bellows Sun. I know they have some permitting issues. I didn't know all the details about it, and I felt like, well, maybe this is a really long-term game for them. They did their due diligence, and maybe they're betting for a 5 or 10 year period. So I was a bit too skeptical. I didn't buy it at 7, 8 cents, and then it moved to 28 cents. It came back a little bit to 18 cents right now. But you can see that when a company gets a big name, funding, a bit of confirmation that they're doing the right thing. In this case, it's a permitting story as well. And now I know a little bit more, and I know why the permitting may be a little bit lower risk than initially. Um, but again, discoveries and stewardship, I think, can really change the narrative in most cases.
Well, and this could get quite philosophical, but why do you think that is? I mean, is it because of some sort of a macro narrative where it's, oh, metals and we need metals, there's going to be demand for metals and all the things that we've heard 5,000 times over? Or is it because of the lack of new tier one discoveries because we don't make them at the same pace that we used to make them 20, 30 years ago?
Well, I think discovery is very easy to explain because it's one of the few businesses in the world that can be worth $5 million on day one and $50 million on day two. I mean, every company that drills a drill hole in a prospective location, even if there's just one grab sample or something, sometimes somebody gets lucky and the company has nothing on one day and has an amazing discovery on another day. And of course, on that second day, there's no certainty about this discovery, but it's still, of course, in steps. So a drill hole really de-risks things typically, especially if it's a wide intercept. So I think a discovery, not even really, I mean, even in a bad market, even if the metal is not in not, I think even a lithium discovery right now, nobody really cares about lithium anymore. A big lithium discovery like Q2 did last year still gets people interested because you have a small company with nothing, and in one news release suddenly they have something. So I think it's just discovery is easy to understand why you get a big change in share price, and I think getting an investor in like La Mancha is really a big de-risking event because the biggest risk in this business is probably financing among a couple of other high risks, and every financing dilutes, every financing gets in many cases many bad shareholders, and if you then suddenly get a big shareholder behind you, really de-risks a small company. So I think in both cases it completely makes sense, and that's why I keep on seeing the discoveries and the big names in the top 10 lists.
Yeah, that's true. Financings are one of the major risks. I think geology too, and maybe that's the reason why porphyries are working out better maybe than expected. I think jurisdictional permitting risk is another one, but we can go down that rabbit hole. But those are probably the top three. So financing, geology, and permitting. And if you look at the things that have worked, they do check out on most of these boxes. And I'm thinking about Aris Minerals. Again, biased. I do own the stock, but they just got some warrant money, quite a decent amount of warrant money in. So no necessarily need to raise capital right now. They could go for strategic financing here. Jurisdiction wise, it's a wonderful but an unknown jurisdiction. Therefore, it was undervalued before. And geologically, now they're proving that the system is much better than what previously expected. So those three risks were essentially kind of taken off the table with Aris, as far as I understand it, and that's resulting in a nice share price appreciation. Now, oh wow, I said it correctly. Share price appreciation. I normally say something like share price appreciation or something along those lines. But what I'm thinking here is one of the things that you, again, San Lorenzo, you've participated in. The pop in the stock price happened during PDAC. So you told me that it had happened. I looked at it and I was like, okay, I clearly missed this one. Let me move on. Because, and I think that's kind of a mental phenomenon that we can wrap the story in, and that is that I used to have big time FOMO. So I used to, when I see something like that, I would just FOMO into it before, and that lost me a bunch of money. And I think that's resulted in another kind of mental problem that I have here, among all the other ones, and that's that I kind of have a fear of regret, as in now I fear that if I buy it now, I'm just going to regret buying it because I might lose money. So how do you deal with something like that? When did you buy it? Would you buy it now? That's kind of the direction that I want to go into.
Yeah, I think if you compare San Lorenzo with Aras Minerals, I mean, I don't want to compare them with each other, but for one reason only is I think Aras is to a certain extent de-risked, and I mean, of course, it's not de-risked at all. There's many things that can go wrong, but from a point of view, I mean, they already have tech investing in them or partnering with them. Big companies are looking, pretty big investors. I mean, a lot of good people already had a careful look and decided to work together with this company. So that's what I mean with, to a certain level, de-risked. You don't have to worry anymore if they are in the right spot and trying to do the right thing. Are they going to make a huge discovery? We'll see. San Lorenzo is way earlier than that. They made the discovery 2-3 years ago. I noticed it, and there was just no reaction. It was a $4 million company, 4 million, and they drilled over 200 meters of grade. I think it was 0.7 grams, but within 160, 170 meters, they had 1.5 gram or something. And I was like, if you drill such a hole in Chile, somewhere where you never drilled, and you remain a $3 million company, what's wrong? There must be something wrong.
Mm.
But I couldn't find out, but I still bought a bit of stock and just waited and then suddenly a year later, they had some more visuals again, and that's when the stock popped from 4 or 5 cents to 18 cents. But again, the thing came down again. They financed at 12 cents, and the thing dropped back to 8 cents, 7 cents, and they continue to drill some pretty decent holes, not as good as the first one. But this year they drilled a few new targets on the same project. And during PDAC, again, they made a discovery, 150 meters of 1 gram in Chile on a target also never drilled. And they have 2 holes, both 700 meters away. So I'm not sure if it's going to be one big system because they have several IP anomalies. But if those 2 holes would hit, they would have a strike length of 1.4 kilometers, which would be pretty amazing for a $5 million company. So it made sense that the company went up quite a bit to 25 million Canadian right now, I think. But it's still a story where there's no big name involved, like no big shareholder other than the chairman, who is an oil and gas guy. There's no major involved in this company. The market didn't care about it. So what is wrong with this company that it's with such an impressive discovery didn't get any interest? Well, it appeared to have changed. But I think the pending holes are going to make a big difference because the market, of course, is very focused on the short term period. And of course, if those next essays are disappointing, then the stock may go back again. So I wouldn't recommend necessarily to buy it at this level, but to wait for the next holes to see what it really means. But in the bigger picture, I never really invested that much in South America, in Chile or Argentina, for whatever reason. I don't even know. Maybe I just didn't run into people working there. And if you look at where they are, it's just north of the Maricunga belt, which is well, I wrote down 100 million ounces because I found that in some presentation. Of course, there's mostly gold there, but also copper. So just take it as a bit of an indication that it's a big belt. And then to the north in Chile, you have this porphyry belt. And I think for a lot of people, this is, information they already know. But I had to spend a couple of hours to really get a better picture of Chile because I never really spent a lot of time on it. And if you see all these big copper porphyries in the northern part of Chile, and then to the south, you see the Vicuña district where, of course, Filo and NGX are located. And below that, you have a couple of big gold copper companies as well in the belt that they call El Indio. So, yeah, which was kind of interesting to spend a couple of hours, doing a bit of work on Chile. And then I zoomed in a little bit more. I took this slide from Lundin Mining, and I extended it a little bit to show where San Lorenzo is, which is about 200 kilometers, 250 north of Filo, north of the Maricunga belt, and that's where you have a big mine, El Salvador, operated by Codelco, and that's literally 20 kilometers away from San Lorenzo, maybe even less. And I also included the sea levels to get a bit of an impression on, the costs are probably a bit lower. It's a bit easier access than the Filo and projects. So now that we know a little bit where it is, I zoom in again, and I took this. I created this map myself by taking a couple of maps from different companies, putting that information into one map, and showing where, the San Lorenzo property and close to this El Salvador mine. With 4 or 5 different target areas, one high-grade gold area and a couple of gold porphyry type areas. And again, I mean, this is sort of the bigger picture of what San Lorenzo is trying to do. They are hitting really, big intercepts of 100 to 300 meters of zone as a $3 million company, and now finally got some interest from the market. And that's I've got a bit more information, but I don't want to keep rattling on. So this is sort of the introduction about what San Lorenzo is doing and what they have been finding so far.
Someone noted on COCA that their presentation says that they're 21,000 meter elevation. That may be a problem. I don't think that's necessarily true, though, unless they're trying to explore on an airplane. Even airplanes don't go that high. Anyways, I think it's 2,100. It's what they mean on here. What is the, I'm looking at the capital structure. They've got 8.3 million warrants, some options altogether. It says that they have some debt though. So when we talk about, you said financing risk is the highest risk. They don't have cash to go and drill it again, as far as I understand it, right after this. And there's the debt. So how do you look at the financing risk here, especially at this market cap? It's almost 30 million bucks.
Yeah, the warrants are gone. The warrants were exercised yesterday, or they
Okay.
expired yesterday on Thursday, the 13th.
Okay.
So that's probably when this episode comes out last week. And so they have $1.5 million right now. I mean, most companies would raise money right now. This is a bit of an odd company in that the chairman has been loaning the company money, $2 million, to avoid further dilution. He can convert $1 million of that loan into 20-cent stock, and the other 1 million is payable within a year or something from now. Normally, a loan is not a good thing, but in this case, I think the chairman is really trying to avoid dilution and not make, try to keep the value and potentially raise at higher levels. Of course, you could argue that maybe raising right now would be a good thing because at least you have a 30 or 35-cent share price. But I don't think that's a strategy. I think they want to release all the holes and then make a new plan. So they could continue their work with the warrant exercises. They have 1.5 million in the bank right now. They have the best target, according to the company, the best target is yet to be drilled, but they need another access road of that will cost them $100,000, and then they could drill that target too. But it's quite impressive. I mean, they have this in the gold zone. This is a separate discovery. They have already 1.5 kilometer of strike of a 2.5 meter wide vein with an average grade of more or less 17 grams. That's what they sort of internally calculated. Go look at the holes yourself if you think that makes sense. But I made this overview with the colored dots to show a little bit like from the beginning until the end of that zone that they drilled so far, what they drilled. I took the higher grade intercepts. So sometimes there were bigger intercepts like 6, 7, 8 meters or 10 meters, or sometimes 15 meters of grade. But since I realized that most of the grade is within 2.5 meters, I showed the smaller intercepts with the higher grade. So they have 4 meters of 18 grams, 1.5 meter of 58 grams, 3 meters of 12 grams, 4 meters of 7 grams, 1 meter of 18 grams, and they have 2 pending holes. If those 2 pending holes have similar grade, they have 1.5 kilometer of vein system with a grade of, let's just say 17 grams, with a strike of potentially becoming 1.5 kilometers. I mean, there are companies around there that trade at 80 or 100 million or 200 million based on these type of systems. And this is not even the flagship company in San Lorenzo. And I don't want to really start promoting it. I mean, I sound like promoting it, but I'm really sort of surprised that nobody cares about it. It's really my thing. That's why I would be careful because maybe I'm overlooking something. On the porphyry side, they have this one drill hole now on Cerro Blanco that they released 2 weeks ago, and they have 2 holes pending. In my mind, if one of those holes hits similar grades and also big widths, yeah, there's no. I mean, I cannot imagine not having majors being interested to do something here. But again, that's my sort of completely being flabbergasted by this company not getting a lot of attention, except for the last 2 weeks. So it was a little bit of background on this company. It is a funny company in a way that they don't do any promotion other than the Metal Investor Forum. The presentations are not looking great. The news releases lack drill sections. They lack drill intervals. So there's a lot of data that you want to see as an investor that they are not sharing with the public. I discussed it with the company. They have a geologist in country who's not very good with software and maps and things. They have a chairman, and that's really the whole team. So I think this team will be, will become a little bit bigger in the future. Otherwise, it will always remain sort of this, two-man company putting out nice results, but the market not sure, if it is all, if there's nothing questionable going on. Because normally a good discovery is followed by lots of information, descriptions and maps and sections, everything. And we haven't seen that here yet. And I think that's, I have done a lot of work on this company. I've talked to the company for a very long time. I became a little bit more comfortable with it because I feel like they're trying to do the right thing, but they need more people and different skill sets in the company to, present the data in a better way and present the story in a better way. So I'm not, again, recommending this company. I feel it's a fascinating company that with a couple of drill holes like this could become way bigger. But with a couple of bad drill holes or disappointing ones, could be back at square one again. So, in my opinion, when this episode releases, if that's Monday or Tuesday, this stock is either a 10-cent stock or a 50, 60-cent stock. That wouldn't surprise me.
Well, by the looks of it on Twitter as well as the billboards, retail has taken notice. I mean, there's so many opinions about this thing online is it that the billboard's very, very busy. You look at how many messages are being posted or have been posted since that news release was released. How do you deal with that? I mean, is this retail euphoria, and how do you factor that in your decisions?
Yeah, well, it means that if there's anything disappointing next week or whenever the essays come out, then people are gonna run to the exit, which will make people run faster and faster, and everything will just be sold and the thing will crash. Maybe for bad reasons, because I could also imagine a situation where, for example, the porphyry holes disappoint. The two 700-meter step outs do not deliver great immediately, but the Arco de Oro trend, the gold vein, does deliver. Then I think the thing will still go down, even though I think the gold system itself could completely carry this valuation and some more. But of course, the market is not in sort of weighing these things together. If everybody's waiting for the big intercept on the porphyry and the thing is not coming, I also think it's going to be a 20-cent stock again. So for sure, I have thought about taking some off the table here, but I did have a bigger position in 2023. I sold a little bit. I sold shares also because I didn't really know if the market doesn't care about this. What is the market going to care about? So I still did have my warrants, and I still did have a share position, and I increased my share position a little bit more 2 weeks ago. So I have a decent position. I decided to take the risk and not sell it, even though it may be a more prudent one because the next holes are completely going to determine the direction. And yes, there's certainly a lot of retail in this too, I think. But I cannot imagine that majors didn't notice this one. Last time, the headline they used was really not impressive. And this time, they at least made the headline, tell the story a little bit in terms of drills discovery hole. It was just a more impactful news release and title. And the title is required. You really need a title for people to click on it because every day there are so many news releases that people are screening and they miss out on something very quickly. So they get the attention, and now it's hoping for results to back this up.
And then still the financing would also have to work or be done properly in the back of that, even if the geological thing works out. And so the top three main risks that we mentioned was financing geology, or that I mentioned, financing. I don't know if you agree with them, but financing geology and jurisdiction they're all on the relatively high side for San Lorenzo right now, as we're recording this on Friday, March 14, right? So, because I started looking at something else that we talked about a while back, actually. What is it? 2 years ago, a year and a half ago, which was Aston Bay. Aston Bay had almost a similar move, 5 cents to 30 cents. What does San Lorenzo do? 7 cents to now 40 cents. So it's a similar move, right? And then Aston Bay gave all that back on the news on that geological risk. So it was the geological risk, showing Aston Bay's share price down, and it gave all of it back. It's 5 cents right now, and it was 30 at one point. So how do you? I mean, how do you maybe thinking about the
Makes
best
sense.
way to approach this year? But how do you think about that in the context of Aston Bay and what happened there?
Yeah, Aston Bay is a joint venture partner. I don't want to completely compare. The projects are very different, but it has a joint venture with an Australian company. They can only drill a certain part of the year, and the drill costs are $1,000 a meter, and it has to be really big for it to work. And this company, I mean, again, the same thing can happen. If the next results disappoint, the same thing can happen again. But this company owns the complete property outright, no royalties. They do not pay any salaries. The chairman has been funding the company both by buying in the market, buying in financings, and buying in and giving a loan to the company. So this company can make deals. They could, joint venture this to a big company. They could joint venture maybe part of the project, the porphyries, to a big company and drill the gold trend themselves. So this company has options, and I've been thinking a lot about, should I just take a profit because I'm up quite a bit? But a $5 million last week, now $28 million company, with a porphyry discovery owned 100%, or with a gold discovery like this owned 100%, has a potential to go to 200 or 300 million, 400 million, $500 million if things work out. And in most cases, things do not work out. But this gold trend on its own is already quite impressive. So in a way, 28 million is very cheap for what they have in my mind. But in the past, the market didn't care. So
Yeah.
So
Well,
I see so much upside from here, from a market cap point of view, but I do realize that a couple of bad holes can completely kill the momentum again. But I'm not sure if they will be back completely where they started. Maybe then they would still be able to do a deal with a big company that gives it a really big budget that it deserves, probably $20 million, and drill some really big holes in that Cerro Blanco target. But also they have another copper target that we even didn't discuss so far, where they drilled 6% copper. So there's so much going on in this property that I feel like it deserves a very big program, maybe a program that is too big for San Lorenzo themselves. Because normally if you want to attack a porphyry, you need at least 15 or $20 million to start drilling some deeper holes.
what's your average cost again?
Well, I've a little bit of 6 cent stock left from 3 years ago. I have some 18-cent warrants, and I bought a little bit in the market around 21 cents. So maybe the average is 12, 13 cents.
Oh, okay. So you can essentially afford for this to be down 60, 70%, and you still not be in the red. That does change the proposition, I suppose, because I'm thinking though, I was thinking about when or how do you decide to buy stuff like that. But as you said at the beginning, like if you hadn't bought before, you would probably now wait for the assay results to confirm or lower your geological risk at least, which would also, if it pushes the stock price higher and therefore the market cap higher, would also lower your financing risk too.
Yeah.
But when do you know how to sell in that case, or take at least some off the table? I mean, at this point, taking some off the table for you, given how much you might be up, 12 cents, you're up more than a 3x. Even if you took some off the table, you'd still be left with a decent position. Like if you took your initial capital off the table, you'd still have your initial capital times 2 in the story. Or if you just took your profit, you would still have your initial capital in the story. So kind of the same exposure.
Yeah.
So how do you think about when to take profit?
Well, in that way, I already took profit in a way because in 2023 I sold quite a bit at 17, 18, or maybe 16 cents. I don't remember the exact number, because it just didn't get a lot of attention back then, and they did raise the financing at 12 cents. So the risk reward, I didn't really understand the company very well, and I sometimes still struggle. I really learned way more because I met them now in person in Toronto, which made things, I understand things a little bit better right now. In the past, I really didn't understand it, so I felt it was prudent to sell at 16 to 18 cents, and I bought some more in the financing, got some warrants for it, which was in hindsight a nice one to have. Right now, I still feel there's a lot of risk from a point of view that the team is way too small. They need, names that the industry is familiar with so that people can buy the stock without hesitating about, hey, why are there no sections? Why are there no intervals? There's a lot of stuff missing that normally a good company would release with a discovery like this. So I can completely understand why people would be hesitant. And but I feel like these results, if there's nothing funny about it, because I don't want to make it's just I cannot understand. I almost never see a company with results like this trading at a market cap of 25 million, let alone 5 million last week. So I started doubting, like, why am I not seeing it? Is there something completely wrong with this, other than the team being way too small and understaffed? If the market doesn't really, after 2 years, doesn't care about something, why would they care right now? So I had a lot of hesitation over the last couple of years. I think I can sort of understand it a little bit more right now that I met the company, talked to other investors, how they feel about it. So I know a little bit how the market looks at this right now. I know how the company thinks about it. I know how I think about it. And I decided to take the risk here to just not sell stock right now. And because I feel like this valuation is low, but I also realize the stock will go down if for some reason the next results are gonna disappoint, which is possible. So even a really good result on Arco de Oro, the gold vein, and a bad result on the porphyry would still make the company go down, I think. But they did say in those two porphyry holes, the step outs, that the mineralization had similar appearance, but they didn't say anything about similar appearance over the complete length. I mean, was it also 100 meters or not? I have no idea. I didn't ask them. I was not trying to get a hint on that one, but so I'm really, like everyone, completely blind on what the next holes are gonna give. But from what they already have and the market cap, I feel like this company will get some interest. If not by the next news release, maybe they also look for new people, so they feel they need a new team. So maybe a new CEO will come in. Maybe they will get a deal with a big company. So I think there's other ways to attack this property if the next essays are going to disappoint. But yeah, that would result in a bit of a share price. I just decided this time I'm gonna take the risk with everything I have right now in this company, which is a fairly big position, but not something that will make me sleep bad. Like I can live with. It's not too big. It's not too small. It's pretty good for the risk I'm taking.
I thought you wake up in the middle of the night to trade Aussie stocks
Not
sometimes.
anymore. No, I stopped doing it.
But it's might be good for the psyche there. Visual assays, not a fan. Was not visual assays, but visual descriptions of holes. I'm not a fan of that. I don't like seeing that at all. It's in my experience, it's 10 out of 10 times it's resulted in a stock price falling or creating higher expectations than what the hole can deliver. And even if it's a good hole, people can still be disappointed because they expected more. So that's one thing that I think about. What is the maybe examples of, because the way I see it now, or the way what I'm hearing from you here is that whether this next news release is good or it's bad, you're going to take some off the table. If the holes disappoint, you might be out completely, but if it goes up a whole lot, then it might be time for you to take profit. So essentially, we're going to have an interesting conversation next week. That's kind of what I'm getting out of this.
Yeah, I lost you for a little bit, but I think I got most of the question. I think the connection dropped for a little while, but now I think since I'm taking the risk right now, I'm probably not going to be a seller anyways, because I think it deserves this valuation based on what they have right now, even if all the next holes are dusters. That's not my typical approach, but I feel like I do not often see a junior with 100% of the project without royalties, with so many targets, that I feel like I made some money already in the past on this one, so I have some gains locked in from 1.5 years ago. My average is pretty okay. I think I'm just gonna take the risk right now, and for sure I'm hoping for a couple of at least one or two good holes that keeps the momentum in place. But I don't really have a selling strategy right now other than let's see what the next results are gonna give. Because I feel like if those results are not immediately impressive, this company will probably find a new CEO and find new funding and perhaps get a big company to support in an option deal or something. So I think there's more to be done here. And that's why I'm just taking the risk. And I'm not saying it's a good decision. I mean, in hindsight, it's easy to say. Right now, I'm just saying I'm taking the risk, and it could be a $100 million stock, a $100 million stock very quickly if it's an impressive result, and it can be a $10 million stock very quickly if it's a disappointing one. So,
well, we're gonna have an interesting conversation next week, regardless. I think, which I always appreciate. What else is on your list here? Something that you wanted to talk about? Have you done this before? Like, have you been in a story that went up a lot on one drill hole or visual assays, and then it ended up working out for you?
oh, for sure, I've done both. I've sold too early very often, and I sold, and there were cases where I didn't sell and I should have sold. So it's always difficult. I think it's discoveries are in a way a difficult thing to invest in because every news release can at least for the first 3, 4, 5 months, or at least if they can continue drilling. Sometimes you have a season, you have to wait for a couple of months. But I mean, the next 3, 4, 5 news releases are very tricky because they have to confirm that initial discovery. And if they do, and the system gets better, especially with these bigger intercept systems where you have 100-meter intercept, and then you have another 100-meter intercept 100 meters away, and then 200 meters away. Very quickly, you build some level of size that this may work, and I shouldn't say it can only get better, but at least you have sort of the downside is protected because it may already be a 2 or 3 million ounce system with 5, 6 holes. So I think the first 2, 3 months are tricky because you're excited about the new discovery. It brings fear and it brings greed very close to each other because initially you have greed and you want to get in, and then you start thinking about it, and then you have a little bit of doubt, like, hey, what will happen if with this increased share price, if bad news comes out? So you typically want to sell something. I'm a little bit of an all or nothing guy, so I sometimes sell everything. Maybe I should just sell 50%. So I think it's difficult, and if you have the guts to stay, like with Snowline, for example, and you're not going to sell, or a Reunion or a Rupert, or then typically you will do very well. But I am bad at selling, pretty good at buying and identifying opportunities. So I think the strategy after finding something is the most difficult part, and the strategy after buying something. So identifying it and buying it and then doing the right thing is probably the most difficult thing in discovery investing.
Yes, and position sizing is one of it too, at least for me. Because I don't really know how to deal with that. We should have Ian Castle on, by the way. It's been a while since I had him on. I don't remember if he was in the same conversation as you last time, but we should have him on and talk about position sizing. He does a good job determining position sizing for himself too. But what else are we talking about here? I think we went through most of the stuff that we wanted to talk about. What are we missing?
Well, the only thing I guess what I want to highlight is there's one UK company here that's Great Southern Copper, and they I think about a month ago drilled 20 meters of 3.3% copper and 270 grams silver in Chile. And I always follow the London news. I almost never buy it. I do remember Mariana Resources with the big Hotmaden discovery, really impressive discovery, and took a long time for the market there to actually appreciating it. Only when they moved to Canada and when Sandstorm invested was about a turning point for Mariana and became a 10 bagger on that discovery. And Sol Gold also started in the UK, and Greatland Gold. Otherwise, I cannot really think of. Well, there was one. I think there was one more tungsten discovery, I guess. But so I saw this discovery, pretty impressive result. But it is probably the supergene zone, meaning there's probably a layer there, weathered, and that's why the grade is higher. They drilled below a historic mine, but they also have a district with several porphyries. And if you look at the story, it's also in Chile. It also has several targets. It also has a person behind it that, as far as I can see, is knows what he's doing in Chile. But the reason I didn't buy the stock was really because it's listed in London, and I think this result, even though impressive, is probably supergene and not necessarily indicative of the complete system. So I decided not to buy it, but the stock did well after all. I still feel Great Southern Copper is interesting, but I want to see the only time I want to buy a London Junior is when I really feel it's a truly like world class or tier 1 or whatever, really impressive discovery. And this one is impressive, but just didn't hit that level that I wanted to buy it because I have bad experience with London listed stocks as well. So I just wanted to highlight that. Maybe if people know more about it, maybe you should comment on it. But I don't regret not buying it. It's just one of the rules. It has to be really amazing for me to buy a London stock, and this one I didn't buy.
So what are you telling me? Don't buy London stocks.
Be careful with it, I think. Maybe people in London have better experiences and know how to do it. They also have to go. There's a bit of a funny trading system. You have to go through market makers, and if you don't have a system that can work directly with market makers, then you place a bid, and there's this auction type system. And I don't even understand it completely, but in the past I spent some time when I was buying these stocks, and I did well with a couple of them. But I also learned that I only want to be in London listed stocks when I really feel confident about the company. And Great Southern Copper, I liked it, but I didn't like it enough to buy it when I saw the news.
Good. Well, I don't have anything to say on that. I have totally not followed that story at all, and I generally don't do anything else besides TSXV because I can, my head can barely carry that. And I just did an interview with an Aussie company, and that was um, difficult for me as well. But yeah, let's pick it up next week. Thank you so much for doing this.
Yep, sure.
And thank you to everyone for listening and watching. This was an interesting conversation. Any and all questions for future interviews are, of course, welcome. Please post them in the comments. But I am still going to kind of repeat the warning that I said at the beginning, that everything, everything combined with the warning that I gave you at the beginning is to say that you should treat this program as biased entertainment instead of unbiased journalism, because there will always be some type of bias in what everyone tells you online. They may own shares of the company, they may be a director, they may have been paid by the company, and so on and so forth. Now, this entertainment program specifically is intended only for experienced junior mining speculators because mineral exploration, development, and mining is a very tough business. Losing money is the norm and should be the expectation, as this is a very complex sector, and the performance of individual companies typically depends on many different things, including geopolitics, macroeconomics, commodity prices, and many other moving particles that are typically outside of anybody's control, and no one can really proceed him, because unfortunately, and believe me, I have tried and I might even keep trying, though I doubt I'll ever be successful. I just don't possess any superior knowledge about the potential direction of any stock or commodity price. And at least to my understanding, nobody out there does. So you should not rely on this program for directional advice or advice of any sorts, as this was a conversation that was general and impersonal in nature between a couple of individuals, none of whom are your licensed financial advisor and none of whom can see the future. So no guarantees can be made about future events, and past performance is not a guarantee of future results. So please talk to a professional licensed investment advisor with a good long-term track record, as well as do more research before taking any decisions by visiting setterplus.com, where you'll find the official filings of the companies that might have been discussed in here today. And if you don't do that, you're highly likely to lose your money. There's a couple of documents that are absolutely obligatory reading for people interested in the space. And that is, of course, the MD&A, which is the Management Discussion and Analysis. And it's an official document that the company publishes on setterplus.ca. You want to look at the financial statements of any company and understand how and why and where they spend money. And you also want to look at the Management Information Circular, which is going to tell you how much money each insider of a company earns in total compensation, bonuses, and everything, and all the other incentives that they might have. It's also going to show you if there are any change of control fees and whatnot. It's a very important document. And then, of course, this is a technically focused business. So you also want to read the NI 43-101 technical disclosure. And again, if you don't understand it, consult with someone who does understand these things. Because if you don't do that, you are highly likely to lose your money. So yes, thank you so much for listening to this. And I'll leave you with one of my favorite Charlie Munger quotes, which was, if you don't understand it, don't do it.